Hey friends, welcome back to another episode of Making Sense of Your Markets. Today is Tuesday. It's January 11th, 2022. It's kind of funny what happens when we are not paying attention. What the good old government and the Fed can do while we are distracted with Christmas and the New Year and holidays and COVID. Out of the blue, over the last 3 or 4 weeks, the Fed jumps in and says, hey, we're gonna start increasing the Fed funds rate in 2022. And oh, by the way, we're gonna stop buying mortgage-backed securities. So mortgage rates are gonna go up. So what we've seen over the last 4 weeks is a massive increase in 30-year fixed rate mortgages. We've also seen a big push for continued inflation, which is why I'm doing these videos. I've committed over the next, let's just say 3 or 4 months, to bringing you information to help you make better use of your money during times of inflation. How to win with inflation. All inflation is a pressure, a downward pressure, or a devaluation of our dollar. It's making our money, our hard-earned money, worth less. How do you win with that? I'm gonna teach you a few strategies that I'm deploying as a 45-year-old, 46-year-old business person, but you have to understand, this is what I tell all my clients. Like, I don't have a pension. I don't have an incredibly wealthy family that's giving me a massive inheritance. So my retirement is 100% self-built. I've been building this over the last 10 or 15 years. And so understanding how to not only win right now in these times, but how to continue building my retirement or investment portfolio in times like this, I've received a lot of helpful information from very successful mentors and incredible financial planners that I just can't wait to share with you because I know it will help you. So every single week, these videos, I talk about 3 things. I talk about something mortgage related, something money related, and something mindset related. And the whole idea with this is to help you with this information come out the other side of home ownership in a better financial position as a result of our relationship in this info. So I think today's lesson on credit scores and how to increase 3 simple ways to raise your credit score in the next 30 days is going to be so helpful for you. Again, you have inflation over here putting pressure on our dollar. If you need to borrow money and your credit scores aren't great, you're going to have low credit scores and a high interest rate putting pressure on your dollar over here. Both of those are not going to be helpful in regards to your buying power, in regards to making a better use of your dollar. So I'm going to give you some tips today on credit, and then we're going to wrap up with a mindset lesson, the 7 habits of highly effective people. We're on week 31 of 52, so we're coming out the other side of the hill, down the other side of the hill on this 52-week series, and I can't wait to talk with you about balancing courage and consideration. We'll spend 30 seconds on this at the very end. So 30-year fixed rates, week over week, they're up. Now, 3 or 4 weeks ago when I made my last video, 30-year fixed rates were right at about 3.125. Today, they're at about 3.5%. Still very attractive, but they've gone up. 15-year fixed rates, right there in the 2.6 to 2.7 mark. So I don't believe this is long-term, but I have to report the facts, and this is where we're at right now. If you have any questions on your mortgage or mortgages, reach out to me. It's still an incredible time to purchase real estate. The housing market's still on fire. From a home affordability standpoint, 30-year fixed rates are still relatively low. Historically speaking, remember before COVID, 30-year fixed rates were in the 4.2 to 4.6 range. So we're still lower than where we were before COVID hit. So as far as our lesson plan today on credit scores, get your pen out, write this down. There's 3 things that you can do in the next 30 days to raise your credit score. Number 1, pay off or pay down your credit accounts, your credit balances strategically. Pay them off at the end of the billing cycle, not when the statement is due. By doing that, if you pay it off before the end of the billing cycle, the credit companies report to the credit bureaus that updated number before. Normally, they'll report that after you've already made your payment. You've paid it down or paid it off. So pay down your account before the end of the billing cycle. You can find the billing cycle dates on your credit card statement. That's a good hack right there to make sure that when the creditors report to the bureaus every time, they're reporting accurate balances versus you know that you paid it down, but they're not reporting that accurately. Therefore, your scores aren't accurate. Number 2, this is a big hack. Ask for an increase in your credit lines. It's a really easy hack. Call them up. Call up your credit account. If it's a $5,000 limit, just call them up and ask them to increase that to $10,000. Worst thing they can say is no. And then the third thing is, I want you to deal with your past. This is something that I had a really hard time with. Like, I made some mistakes way early on in my financial career. Deal with your past. Find collections accounts that shouldn't be there. Find maybe some erroneous reportings. Take a look at your credit report, but specifically deal with some adverse credit events that you had. Deal with them. Dispute them and ask them to be removed. If they're outside of 7 years, they're going to be removed. If you have collections accounts, don't necessarily go and pay those off. Reach out to someone like myself and I can give you some advice around that, but deal with your past. Those 3 things will help you. If you have any questions, please reach out to me on that. I'm committed to giving more credit information to you in Q1 of this year. Let's wrap up with balance, courage, and consideration. Week 31 of our 52-week series. Dr. Stephen R. Covey says, are there relationships in which you lack courage or consideration? What price are you paying for that? To be highly effective means to be courageous. We are willing and able to speak our thoughts respectfully. It also means being considerate. We are willing and able to seek out and listen to others' thoughts and feelings with respect. So perfectly timed with the whole COVID thing, and everyone has their opinion on COVID and the vaccine and all these mandates. Listen, I think that's super helpful. Listen, people don't always need to hear our opinion, and I normally try to wait until someone asks to give mine. So I hope this helps. If you have any questions, please reach out to me. Happy New Year. It's so good to see you in 2022, and I can't wait to continue bringing you helpful information that'll help you go further with your money and come out the other side of homeownership in a better financial position. Bye for now.